Hello, everyone. My name is Helen Dion. I am Marketing Manager for SWK Technologies. I'd like to welcome you to our Economic Nexus October 1st Law Updates webinar presented by Neil from Avalara. A little housekeeping before we get started. Everyone has been placed on mute to keep the background noise down. However, you can submit a question throughout the entire webinar. To submit a question, look for the question section in your GoToWebinar pod on the right side of your screen. We will answer all questions at the end of the presentation. We are recording this presentation and we will distribute it to everyone who has registered, whether or not they have attended. Please take a moment at the end of the presentation to take a short survey. So with that said, we appreciate you taking the time out of your busy day to attend our webinar. SWK is dedicated to providing you the knowledge, the tools, and the support you need to find an easier way to run your business and get the most out of your solutions. So whether you're searching for the best solution that fits your team or you're just here to learn, we'd like to encourage you to ask any questions and provide feedback so we can continue to improve our webinar service. Lastly, as a quick reminder, we are constantly sharing important news and updates, software tips and tricks on our social media channels. So we encourage you to follow us on Twitter, LinkedIn, Facebook, and subscribe to our YouTube channel. So without further ado, Avalara has put together a really great presentation, very informative. So let's get started. Neil, I'm gonna switch it over to you.
All right, thank you, Helen, and thank you to everyone else that is taking some time to learn a little bit more about sales tax, which is not always the most exciting topic in the world, but it's important nonetheless. And Helen, if you don't mind just giving a quick confirmation you can see my screen, that'd be great.
Confirming we can see your screen, Neil. Thank you.
Excellent. Thank you very much. So really quick background. My name is Neil Yentsch. I'm a partner sales manager here with Avalara. I've been here for a little over 5 years, and for much of that, I have worked specifically with Sage users in helping them understand, sales tax obligations and Avalara solutions. We do also, however, partner with over 700 other billing and invoicing and e-commerce type platforms. So. My goal for today is really to cover some of the more recent changes with regards to sales tax requirements, specifically the economic nexus laws that have all been passed since the South Dakota versus Wayfair ruling in June of last year. We'll also share a little bit about how Avalara has been working with customers and clients as far as trying to keep up with the changes. And then I'll finish off with a little bit about the Streamlined Sales Tax group, which has seen a meteoric rise in popularity since these rules, and it's a pretty good program for a lot of folks to try to keep up with all this. So what is South Dakota versus Wayfair all about? Really, back in June of 2018, it was a Supreme Court ruling in the case of South Dakota versus Wayfair, the pretty well-known marketplace. And really what it does, when you boil it all the way down, is it gives states the ability to require out-of-state sellers. It gives the states the ability to require those sellers to collect and remit sales tax on sales being delivered into their state. So prior to this ruling, the standard for that requirement was a substantial physical presence. You needed an office location or an employee or a warehouse or some other physical tie to a state before a state could require a company to collect and remit. The Wayfair ruling adds on to that nexus requirement. Now it can be based purely on what they're calling economic nexus, or that sales connection into a state. It started with South Dakota, and it's been a massive sea change ever since then, with states trying to take advantage of these extra revenue opportunities. So as I mentioned, economic nexus is a tax obligation imposed on sellers based specifically on their level of economic activity within a state. It really has nothing to do with physical presence, although that still is a requirement. The new laws will focus specifically on a sales volume and or a transaction volume. One of the more common thresholds or combinations that I see is if you sell up to $100,000 in sales into a state in a year, or have say 200 transactions into a state in the previous year, states are now able to say that's a substantial presence in our state. You now need to register and start collecting. So not only is it creating additional exposure, it's creating a lot of complexities, not just with the calculation and filing and remittance that's happening, but also just keeping up with the rules. Because just like everything else with sales tax, the specific state has the ability to create their own rules. So it's a little bit different everywhere, and it's a real challenge for companies and businesses selling into multiple states to keep up with what the actual requirements are and whether or not they've triggered them and now have an obligation and tax exposure. So this map here outlines, as of October 1st, all of the states that have passed and are enforcing economic nexus thresholds. Now, there are 5 states that don't have sales tax at all, those being New Hampshire, Oregon, Montana, Alaska, and Delaware. There are only 2 states currently in the United States that have a state sales tax but have not already passed an economic nexus law, those being Florida and Missouri. So this is a very real thing that's happening, and it's already here. So hopefully today you can gather enough information to at least get an idea of how to tackle it and make sure you're staying compliant and eliminating any risk exposure to your business. And as I alluded to just a minute ago, every state does have the ability to set their own thresholds for what these economic nexus rules are. A couple examples here would be Colorado went into effect just a couple months ago, or a few months ago, June of this year. They're only looking at sales volumes, and they have a relatively low threshold. So if you're physically not in Colorado, you don't already have a physical presence there, but you sell more than $100,000 into the state of Colorado in the previous 12 months, by the letter of the law, then you need to register and start collecting going forward because you have triggered economic nexus there. Hawaii started a little bit earlier, July of last year, and they actually have a combination of dollar threshold and a transaction, or a transaction threshold. So even if you hadn't sold more than $100,000 in sales into the state of Hawaii, but you had more than 200 individual transactions into the state, Hawaii is going to consider that an economic nexus triggering event, and they would then require you to collect and start remitting on all sales going forward from that 200th transaction. Tennessee, as you can see, is a little bit more recently than Hawaii, about a year exactly more recently, but their threshold is much higher. Right? They're saying that until you reach $500,000 in sales into the state of Tennessee, you actually don't have economic nexus. And so it's a very wide range of what a state is considering to be economic nexus and when they want businesses to collect and remit, which only adds to the complexity for businesses to keep up with all of the different rules. One other question that we get pretty often is specific to what I would say the manufacturing and distribution space, where you may have a lot of sales, but you're typically not subject to tax because you're selling to resellers or distributors who ultimately aren't the end users. Most states are going to count exempt sales as going toward that economic nexus threshold. In fact, there are 43 states with economic nexus laws, and 39 of them include exempt or non-taxable sales in those thresholds. So even if you may be in the manufacturing, distribution, wholesale type space where you're not collecting tax from your direct customers, you may still have a tax obligation or exposure in that state. A couple examples we've seen recently, you can see on the screen with a manufacturer in New York, almost none of their sales are to the end users, but they trigger economic nexus based on New York's definition. They had to go from fewer than 75 exemption certificates to be managed to nearly 1,200. Because as they triggered that nexus in other states, they now needed to prove why they didn't collect tax to that state, just like they previously did in New York. Similarly, with the national wholesaler on the right-hand column, they went from fewer than 500 certificates to 10 times that, of more than 5,000 required. So just because you don't typically need to collect or remit sales tax doesn't necessarily mean that these laws and rules are aren't going to impact you or your business. So it's definitely something to take a look at and make sure that you stay compliant, even if you don't traditionally have sales tax collection issues or requirements. So what do you do? How do you figure it all out and make sure you're keeping up with all of these things? First, we would definitely recommend contacting a state and local tax expert, whether it's a CPA or a tax attorney, to really get a handle on what all of these individual states and rules and laws are, to get a handle of how big of a challenge this may be for you, and work with them then obviously to understand the rules and also figure out where you have Nexus, where have you triggered these requirements and obligations so that you can come up with a plan going forward. If you don't already have a relationship with an outside tax expert or a third-party CPA firm, Avalara is more than happy to make some recommendations to other tax experts that we've worked with in the past. We do have a tax advisory services team that can do some projects like Nexus studies and things like that to help you get a handle on what's in front of you and what your requirements may be in any given state. But definitely the first step is just to figure out what the challenge is and what needs to happen so that you can get current going forward. And just getting that understanding is always the first step in coming up with a good plan. One of the things Avalara can do, or you can do on your own or with any other third party, is getting registered. Different states will have different requirements for the type of registration you need, whether it's just a business license, if you need to register for sales tax. It can vary state by state, but again, figuring out where you have that requirement is first, and then figuring out how to get registered is the next step. I'm sure most of you know already, if you're collecting sales tax without being registered to collect sales tax, that's a big no-no, and definitely something that is not completely legal to do. So don't skip that important step of registering to collect sales tax once you figure out where you need to be. One service that we do offer, we've actually partnered with businesslicense.com, is that we can streamline and automate the registration process for you. Typically, if you're doing this on your own, you're going to each individual state and filling out a whole lot of redundant questions about ID numbers and every other question that they're going to ask you. Avalara can kind of consolidate that and essentially have you fill out one form and use that to complete all the registrations in the different states that you may need. Another big topic that we're seeing more and more of is specific to marketplaces and marketplace facilitators. These are very similar laws to the economic nexus thresholds, but they're very specific to selling on marketplaces like Amazon or eBay. Wayfair is a good example, Walmart.com, where sellers can list their products on these third-party marketplaces like Amazon to be purchased by the ultimate end user. A couple of years ago, states started to realize that a very large portion of Amazon's sales were through the marketplace and not sold directly by Amazon, where Amazon was collecting tax. So they started getting a little bit creative with their rules and saying marketplaces need to collect and remit tax on all sales into their state, either on behalf of their sellers or in order to provide reporting to their sellers so that the seller can actually file and remit. If you're selling on marketplaces, it's definitely important to understand what the obligations are and what the marketplaces may be helping you with. Really, the states that are passing these laws, and it's a very large chunk of the states today, are passing these laws, but they're really targeting the marketplace themselves in order to do this. So getting a good understanding of whether or not a marketplace is collecting for you or not in each individual state is going to be important to make sure that you have all your bases covered as it relates to tax compliance. As you can see here, it's, as I mentioned, it's a very big chunk of the country that it's already passed and enforcing marketplace facilitator laws. Not quite as many as the economic nexus laws, but we're definitely moving in the same direction. So if you are selling on a marketplace and you have sales into these states that are highlighted, or any states, it's definitely recommended to reach out to your account manager or whatever contact you may have at that individual marketplace to figure out what their strategy is and how, if at all, it may impact your tax strategy going forward on your transactions. And here are a few examples of some marketplace facilitator laws on the books. California actually just started theirs a few weeks ago. Ultimately, what that says is that if a marketplace is located in the state of California, they need to collect just like they would have anyway. If they're not located in the state of California, but they have sales in excess of $500,000 in the current or preceding calendar year, at that point, they need to start collecting and remitting on all sales facilitated by their marketplace into that state. So it kind of shifts the onus of compliance from the seller to the marketplace once that marketplace hits $500,000 in total sales across all of their sellers in the state of California. Similarly was New York. They were kind of the leader on a lot of these Amazon-type tax laws. They've been fighting Amazon in court for years and years and years. So they're one of their earlier adopters with the marketplace facilitator law, specifically because of Amazon. But they're another example of it's a combination then of $500,000 and 100 transactions. And they're looking at it as the previous 4 quarters rather than a calendar year. So again, it's just all those little nuances that are important to understand on a state-by-state basis to make sure that you and or your marketplace facilitator are keeping up with it, making sure that you're compliant. And lastly, in Texas, another one that was just recently passed, but it is a significant state as far as population and sales tend to go. You know, if you're in the state, it's pretty straightforward. You need to collect and remit. They call out specifically taxable items. So if you're selling an item that isn't subject to tax in the state of Texas, it's maybe an opportunity where you can kind of skate around that and not actually have any tax obligation. Moral of the story remains the same, though. In each individual state, the requirements and the thresholds and the triggers are all different. They all have their own nuance. So be sure to do your research either with a tax expert, a tax advisor, or with the marketplace itself if it relates to a marketplace type of a transaction or relationship. Now, you may be thinking with all these new laws and rules and potentially having to exponentially grow your sales tax requirements as it relates to the number of states, it's going to be difficult to keep up with in a quote-unquote manual process, whether it's keeping up with the tax rates or boundaries in jurisdictions or taxability rules or filings. It's a lot to take on. And we've really seen that the interest in automating that process has really grown just as fast as all of these new laws have. Because people understand it's really not something that is going to ever help grow a business. It can only slow you down. So outsourcing that part of it can be a really good option. The laws, as I mentioned, are changing quickly or have changed quickly. And again, automating all of that change and streamlining the processes in the long run tends to be a good fit for a lot of companies as they're reaching these thresholds and adding states. One of the big reasons why companies are automating tax, it's not only the change, but according to Aberdeen and Wakefield, it's not very likely, according to the CFOs that were surveyed by Aberdeen and Wakefield, it's not very likely that a CFO or whoever's in charge of tax in any given company is going to be confident in their actual process. 75% of CFOs surveyed said that it's likely that an auditor is going to find mistakes if they were to be audited. That can't be a very good feeling if you're responsible for compliance. Automation, of course, is going to eliminate a lot of that human error, potential for error, and the growing pains of having to add all these new states. Behind that, I've found in my conversations with hundreds and probably thousands of businesses over the years, is that when you really dig into what compliance entails, it's a lot more than people think. There are a lot of hidden costs in maintaining compliance, whether it's the hidden cost of the time spent researching rates or updating tax schedules in your systems, or just filing the returns themselves. All those little things and all that time spent really adds up to the point that, according to Wakefield, this is according to Aberdeen, the average cost of tax compliance in a year can range between $60,000 and approaching $500,000, really depending on company size and total exposure and things. But it's a big expense to a business, and it certainly can be done more efficiently if you're not spending your own time doing that. Similarly, according to Aberdeen, the top performing organizations, so those that are growing more quickly and are more profitable and are just more agile in the marketplace, they're 72% more likely to leverage real-time updates to these tax changes. So just eliminating the research that you're having to do to keep up with the rules can be a huge boost in a business's efficiency and productivity. Similarly, they're over 3 times as likely to automate the filing and remittance process itself, not even counting calculation and exemption certificate management, just the filing itself. The top organizations in any given industry are very likely to be automating that process. I know years and years ago when I first started at Avalara, and I was just kind of getting to understand, I thought tax compliance and I thought calculation, and I really stopped there. But there is a lot more to it. As I've been discussing leading up to this particular slide, figuring out where you even have sales tax nexus is a big challenge, and just understanding that and keeping up with it. When you get beyond that, there's product taxability considerations. Not everything is taxed the same everywhere. Even if you are selling all one product where it's considered tangible personal property and it's all always going to be taxed everywhere, there's still freight considerations where that can be taxed differently based on where you're shipping it to. So that's a big thing to keep up with. And then there's the jurisdiction assignment. I talk with a lot of businesses that are just using zip codes or some kind of zip code based rate table to assign a tax rate in a jurisdiction. If you really peel back the onion and get into some of the granularity of addresses and taxing jurisdictions, I've seen examples. One always comes to mind because it's in Commerce City, Colorado, and I just think that's an appropriate name to have difficulty with tax. But you can have 7, 8, 9 unique tax jurisdictions in a single zip code. So getting that correct can be a real challenge, particularly as you're selling into more densely populated areas where they do have some of those unique taxing jurisdictions. Beyond that, if you're selling to exempt customers or non-taxable entities, whether it's a reseller or a government agency or a not-for-profit or any other number of tax exemptions out there, making sure that you have the correct documentation to prove why you didn't collect tax is a really difficult thing to do. Every state is going to require a different form. They may or may not accept forms from other states. The forms themselves may or may not expire at any given period of time. And having a process to maintain that is a real challenge as well. And of course, there's the filing and remittance process. That obviously needs to be done. And then having accurate, usable reporting to support your returns and filings and calculations if you're to be audited is going to be a key as well. So a lot of things below the surface as you really dig into why sales tax is so complicated and why it gets exponentially more so as you add states or product lines. So with Avalara at a very high level, we've got a suite of solutions that all work seamlessly together to help automate all of those different things for you. When it comes to Nexus jurisdictions, we've got some really good reporting and some visual tools built into our dashboard that can help you keep up with where your sales as a company are relative to the individual economic Nexus thresholds. And we've got a lot of good information readily available to help you compare, how close am I in this state? Do I need to start thinking about registering, those kinds of things? And then once you get registered, it's literally the click of a button that tells Avalara to start collecting, and you're on your way. You don't need to research rates, rules, boundaries, anything like that. We also manage product taxability. We have a content team of over 120 people that continually research product taxability changes, update our system so that you don't need to worry about updating your rules in your native systems to tax each individual item appropriately. On top of that, there's the jurisdiction assignment. I referenced zip codes already. They're okay, but they're really more for delivering mail than they are for tax calculation. Avalara guarantees that we will calculate tax accurately, and we will also assign the appropriate jurisdiction based on where you're selling an item. You have another tool called Cert Capture that can help automate the exemption certificate management process. It has all the logic built in to understand which certificates are accepted in which state for any given exempt reason, if they expire, and there's a lot of functionality to help you be proactive in managing that as well. So we can help you get rid of the old shoebox in the corner filing method of all those certificates you may be accepting. Then there's the filing and remittance process. Avalara is storing copies of your transactional data so that when it comes time to file and remit, you're really just reconciling or validating what we've recorded against your GLs for tax. If everything looks okay, you just click approve and we can do the rest for you. So really saving you a lot of time assigning jurisdictions, breaking out the tax amount per jurisdiction on the return, and logging into e-files and doing all those things that you're already having to do. We can eliminate the vast majority of those tasks and help you and your accounting staff and team get on with the rest of their day. And with audit readiness, we've got several dozen reports. I like to say they're built by accounting and finance people for accounting and finance people so that they're very usable and really not just data dumps. So if you are to be audited, it's going to be much easier for you to provide the auditor with the information that they're requesting, segmented by however they want to see it. How it all ties together with all those 6 or 7 points I just reviewed. Avatax is the name of our tax engine where we're calculating tax. I mentioned at the top that I work primarily with Sage. We do integrate with over 700 different systems. So when we're plugged into wherever you're generating transactions, rather than that system having to call whatever native tax functionality is built in there and you or your sales team or whoever having to select tax rate, that system's just going to send Avalara or Avatax that transactional detail. We'll analyze what's on there, cross-reference it with your tax profile, that being where you need to collect tax, and we'll return the accurate tax calculation right back into that invoicing screen. And that all happens in a blink of an eye. It's pretty fast and you'll never notice it. That ties in directly with Cert Capture that I mentioned, where we can help you automate the exemption certificate process. Cert Capture is part of that tax call, where in addition to looking at where you're selling a product and what you're selling, and if you need to collect tax there, we'll reference a customer record to see if there's a valid certificate on file. If there is, we'll mark it as exempt and return 0 tax. If there's not a valid certificate, you can use Cert Capture functionality to directly reach out to your customers. They can just walk through a quick wizard or a few questions about their business and why they're exempt, and that will populate the correct certificate for that state, for that exempt reason for that customer, so that Avatax understands not to collect sales tax from that customer in that state. And finally, when it comes time to file and remit, as I mentioned, It's just a reconciliation process using our reporting that's already built to help you with it. Approve the numbers, and we can then automatically file and remit on your behalf. As part of our service, we actually do handle notice management. If a state reaches out to you for any reason, submit that notice to us, and we'll take care of it for you. And we will store completed copies of the filed returns in the dashboard for your records as well. So we've got you covered end to end there. All these things work seamlessly together with your accounting systems or transaction systems. So to sum it all up, Avalara with automation makes tax compliance much more accurate than zip code-based tools or trying to become certificate experts on your own. It's much more efficient because we're doing all of the updates for rates, rules, boundaries, filings, and it really eliminates all the time spent keeping up with these things by your team. And as I alluded to a couple times already, we're integrated with just about every billing, ERP, point of sale, e-commerce type platform that's out there. So as your business continues to grow and evolve, and so do your requirements, Avalara is already ready and waiting there with a solution that's likely going to help you out. So the last section I was hoping to cover is the Streamlined Sales Tax group. This group has actually started in the late 90s, early 2000s, and it's since the Wayfair laws, it's kind of had a resurgence in terms of the level of interest that we're seeing at Avalara for this program, because so many companies are having to add so many states quickly that the SST is becoming a more and more appealing option for companies. So what is it? The SST is, at the highest level, it's a group of states. I like to describe it generally as the middle third of the country, with a few outliers. But they got together and they decided that they wanted to make sales tax compliance easier. They wanted to make it easier for businesses to register, to collect and remit sales tax in their state. And it's a good opportunity for them to grow their revenues. So they got together and they tried to standardize or make more uniform the product taxability, the registration process, the filing process, and just make it a lot easier and eliminate some of those state-to-state nuances that we see so often in sales tax compliance. So it makes it easier for companies to be compliant, and it makes it easier for all of these states to grow their tax base and increase their revenue. So I mentioned it started, or at least the research of it started in 1999, and you can see the goal here. Make it less complex, make it easier and a more fair system for in-state or local merchants. I remember this was before the Wayfair ruling, so it was all based on physical Nexus now. So the e-commerce sellers that didn't have an office or an employee or inventory or whatever in a state didn't need to collect tax, and that really wasn't fair for all these local businesses. So the states got together, they tried to eliminate all of these changes, level the playing field, and again, grow the tax base. There have been a lot of studies that have shown states were losing billions and billions of dollars in uncollected online sales tax. So the really interesting thing, to me anyway, is that the states kind of came together to grow the tax base for physical Nexus, and there was some traction there. A lot of companies took advantage of the program. But since the advent of these economic Nexus rules, the SST has become a really hot topic, and we're seeing a lot of companies sign up and join the SST because, again, it makes it really easy to be compliant in these states. And what the SST so far hasn't done is looked beyond the physical presence for what they consider a volunteer remitter. The reason that this is important is that if you qualify as a volunteer remitter, which you can see the criteria before, and generally if you don't have a significant presence physically in a state, you don't need to collect you would qualify as a volunteer remitter. But what the SST said is that even if you trigger Nexus and need to file an estate based on the economic thresholds, you can still qualify as a volunteer remitter. The reason that is important is because if you qualify as a voluntary remitter in an SST state and use a certified service provider to the SST, you can actually get the SST services or tax compliance in the SST for free. So if you partner with a certified service provider to the SST and qualify as a voluntary remitter, you can get free sales tax registrations in the states, free tax calculation in the states, free returns filings in the states. That service provider will act as an audit liaison if you are to be audited in that state. And it really, again, standardizes everything and streamlines the whole process. So as you can imagine, if you don't have physical presence in a state, but all of a sudden you have a requirement to collect, being able to do this for free in these states in a much easier fashion than just going through the more traditional registration and having all the unique state-to-state nuances with the rules, the SST starts to look like a really good option for a lot of companies. Now, how the certified service provider works is that you go through a pretty stringent certification process with the SST, where they need to validate all of your tax rules, your jurisdictional assignments, your filing process, and all these other things to make sure that you're calculating and providing accurate tax compliance to, in this case, the certified service provider's customers or clients. So it's very difficult to do that, but it allows the states to focus their audit and compliance efforts elsewhere, essentially. They don't need to spend as much time kind of double checking what's going on if the calculations and remittances are happening from a certified service provider, because they've gone through this process already and the states just know that it's going to be accurate. Avalara is one of, I believe, 6 certified service providers. We are by far the largest. But again, if you work with Avalara or any other certified service provider, you can get those free services. Behind the scenes, what's happening is that the state understands that it's saving itself a lot of hard work and effort in chasing after and auditing all these companies. So they pay the certified service provider for doing the compliance. The requirement, though, is that the certified service provider has to pass those savings on to the SST member or their customer for free. So it's a really good program. It's a win-win-win for everyone involved. So if you are considering joining the SST and you're considering automating sales tax with any provider, just be sure that they are SST certified and are a CSP to the SST before you get too far ahead of yourself and realize that they're not, and that you're having to pay for those services. So then to wrap it all up, sales tax is really complicated. It's getting more and more complicated, not only because of the changing rules and jurisdiction requirements and all those things, but because companies are just expanding their Nexus faster than they can keep up with. So automating that process is always a good idea. And with the SST, if you're able to do that for free, it's even better. That is what I had today. Again, thank you all very, very much for the time. I'll pass it to Helen now. If there are any questions that had come in over chat, I'm happy to do my best to address those as they come up. Helen, if there's anything.
Thanks, Neil. That was great. So we did have a couple questions come in throughout the presentation. One of them was asking if a copy of this presentation will be provided, and the answer is yes. Everyone who registered, whether or not they attended, will receive a copy of the recording tomorrow in their inbox. And then a couple questions came in a little bit more around Avalara and sales taxes. Someone was asking do I have to change any of my current ERP processes to use Avalara?
Not usually. Avalara's system is pretty flexible. We're built to support kind of the small mom and pop business all the way up to enterprise level entities. I'd have to know a little bit more about how you're actually doing it today to answer that definitively, but more often than not, there is little to no change. And oftentimes it's less work than you're doing today in order to get the correct calculation. I'd have to learn a little bit more to give a more detailed answer. Generally, no.
Okay. If this person has more follow-up questions and they want to learn more, I will let our account management team know, and you know as well, so that someone can be in contact with them.
Excellent.
So another question that's come in is, with some states changing laws on economic nexus, does AvaTax keep up to date with all the new changes?
Yes. I think I mentioned it. We have a content team here at Avalara. It's made up of, it's over 120 people. I don't know the exact number, but their job, I don't know how they do it every day, but they simply research and update all of the different tax rates, any changes. There are over 12,000 tax jurisdictions in the US and even more changes than that every year. So they're monitoring all the different changes in the rates. They're monitoring changes in jurisdictional boundaries. They're monitoring changes in product taxability rules and any other requirement there may be. We update our tax engine at least once a month with all of these changes, and the updates are date sensitive. So if we know that a rate is going to change on December 1st, we can update that today and have that rate go into effect on December 1st. And we do guarantee that we will get that right for you every time.
Nice. So if anyone has any more questions, now would be a great time to ask. We do have a subject matter expert with us right now who is ready to answer any more questions. So I'm just waiting to see if anyone else has any questions. And just as a reminder, if you have a question, go ahead and type it into your question section in your webinar pod. Oh, it looks like we did have one come in.
All right.
Someone is asking, how about sales tax in Canada?
Yes, that is fully supported. The easiest way I can describe it is that we would treat each province just like we would a state. So we can fully automate the calculation, filing, and remittance in Canada as well.
Okay. Thank you. One more. If we qualify for economic nexus in a state, are we then required to file a corporate tax return in the state?
I'll be honest, I don't know a lot about corporate tax or the requirements there. So I would defer to either a CPA or some other tax expert to get an answer there.
Okay. And you mentioned that you have you know, a list of CPAs that you can refer to any customers that have questions that are more geared around actual tax laws and things like that?
Yeah. Generally what we would do is learn a little bit more about the specific questions, and then I could reach out to our tax advisory team to see which firm or firms maybe have a little bit more expertise or experience with any particular subject, and then we can make introductions from there.
Okay. Okay, more questions coming in. This is great. So our sales tax are not as high as $100,000 in each state. So how do we proceed with this?
Well, when it relates to economic nexus, if you have not met a threshold in a state, then nothing changes for you, right? You haven't triggered economic nexus, so you at that point have no sales tax obligation. So that one's pretty easy to handle. It's once you reach that threshold that you need to start getting registered, and collecting on those sales going forward. But if you're below the threshold, whether it's a transaction volume or a sales volume, then you have no obligation and no nexus in that state, and therefore no responsibility or liability to collect tax.
Okay, so that was their follow-up question, is they wanted to clarify if that meant that they did not have to collect tax, and that sounds like they do not have to.
Yeah, with the assumption that you don't have any physical nexus either. Yes.
Okay. All right. Let's see. If anyone else has any questions, please feel free to ask them. If there's something that we don't have the answer to, we'd be more than happy to point you in the right direction of someone who will be able to assist. And sounds like no other questions are coming in. So again, if anything comes up after the webinar, you have specific questions about Avalara or about Economic Nexus, you can reach out to the SWK marketing team, and we will make sure that your question gets directed to the correct person. And again, we really appreciate you taking time out of your day today to attend. We hope you learned something. And Neil, thank you for your expertise and for your diligent details about all these changes that are coming up.
My pleasure. Thank you, Helen. Thank you, SWK, and thanks for everyone that joined. Very much appreciate it.
Thank you. Have a nice day, everyone.